What overrules wills, trust, and good intentions? The loss of a loved one is tragic and heartbreaking in itself. Not having them a part of our day-to-day is already difficult, but imagine learning that their estate was not in order. This brings even greater difficulty during this heartbreaking time. Estate misinformation occurs often in my 3 decades of estate, financial, tax, and investment planning. So what is assumed, and my motivation is that I did my estate plan. Here's what I expected to see happen. My will says my children will get X percentage of my estate at age 25, a percentage at 35, and the remainder at age 50. My attorney set this up and provided guidance. And like many other people that I've talked to, this was very common. All the documentation, the notarization, all that stuff happened. But while it was stamped and legal stuff was done, but did it match my intentions? Surprise, there are many items that are not addressed by the will, trust, and in fact, supersede all your legal planning. What are these things? These are items that have beneficiary clauses. And that's really important because the beneficiary clause overrules and has authority over all other legal documents. For example, life and annuity contracts have a beneficiary name. It's often, there's a primary and a contingent or a secondary. They're 401k, IRA, Roth IRA, other qualified plans, they have beneficiary clauses. Again, controls and directs the asset flow on death of an individual per the name provision. Lastly, there are other arrangements that give ownership, control, or named beneficiary flow of assets that also will usurp your legal documents. One example is the joint tenants by entirety. Another is joint tenants with rights to survivorship. Most common one I see is the transfer on death, TOD, and the payable on death, POD registration. Gaining clarity and registrations and the beneficiary provisions on both the primary and contingent is a great first step in planning. Digging into how deeds are titled, again, another great way to have clarity and to avoid surprises. A really powerful time, a painful time. My friend Ron says, a successful plan is one where everyone loves each other 1 year after you died. I have to agree with that. So while there are 2 guarantees in life, death and taxes, we can do more than simply creating a will or a trust, signing papers to give powers to others when we need help. My personal experience is most people view estate plan as I get a will, I get a trust in place. Pulling out all your financial statements, listing out the details of what do you have, how is it owned, will be a real key to the clarity about distribution and family peace in the future. One more thing I must bring up is to give you real value. If your intentions are protecting money from doling it out too quickly, let's say you have a really large IRA and you have this beneficiary clause that says, hey, this is going to my children or it's going to my nieces or nephews. I've seen this happen where you can have tragedy when you think you're blessing someone. But there are ways of naming a trust as a possible solution, and inclusion of charitable gifts can also be beneficial as well. Having an experienced professional. Ask the right questions to allow you to come up to a workable solution, understanding that you need to communicate this. Having communication with your heirs and their expectation will provide for family harmony. I'd love to have that conversation with you. If any of this sounds like something you'd like to review, reach out to me, Scott@stewardshipmatters.net.